Hello everybody, welcome in. How are we all doing today? Make sure to say hello in the chat so we know how everyone's getting on. So today, pretty much what I'm wanting to do is just run through some top-down analysis on everything because I've not been as active in the markets recently, and I just want to make sure that I am adequately prepared for the coming trading week. More than anything. Dean, hello, how are we getting on, mate? You good? And yeah, just make sure I'm adequately prepared for this coming week. So the idea being here is we'll just run through a couple different markets and do a top down on them. So firstly here, I've got the Euro USD loaded up. So what we're going to do is remove all drawings. I always like to do this, and to be fair, I'd probably suggest a lot of people do this as well. If you've been away from the market for a while, you sort of lose that idea of what exactly is going on, and it's really good to do a top-down analysis to just refresh your mind on where the market is at and how you want to tackle it. Now, I would honestly, if you can, suggest doing some form of a top-down every day, just because it puts you in the right headspace. Like, it's sort of like saying to somebody, I have a book in front of me, and every day you're going to read one page of that book, yet you're going to try to summarize the entire book to me from that one page. And that is pretty much what we're doing if we just go to the market and don't do any full analysis before we place a trade. Now, instead, if you go to somebody, I want you to read that entire book and then summarize it, you're obviously going to be able to give a much better summary of the entire book, or of the point of it, of what you're taking away from it, given that you've read all pages rather than just one. So a very similar thing here. Why do we want to just read one page and try to make a rational prediction from that? Well, we can actually read the entire book to gain a more detailed insight. So that is exactly what we're going to do here. We're going to start off on the 3 month. Now, of course, even on these higher time frames, like, my analysis is going to be the same every single time, right? Don't get me wrong. On these higher time frames, I'm going to draw out the exact same thing every time I look at the chart, but it doesn't really matter because it's still helping me remember what's going on and what I need to know. So, as my bias has always been, we are most definitely looking at this to be bearish structure. Obviously, if we follow it, we have an impulse, a correction, an impulse, a correction, an impulse, and now we're working within this entire move as an impulse. Now, yes, I can use this 3-box strategy and leave the boxes on there. However, for me personally, I find it clutters the chart quite a lot. So I'm still going to understand that that is there. I'm going to understand that this is still going to be a demand zone. Okay, point of interest, demand. And then we're going to understand that ultimately we want price to come and exceed this level to liquidate the high so that we can continue trading bullish. So obviously looking inside of it, we can look back and say, right, well, we've had price tapping into demand zones prior. We obviously have a little zone down here that has been left over. Okay, and then we've had all the liquidations. So the main thing we're trying to get out of this more than anything is the importance of that top-down analysis. And this is a little something that I call foresight, because if we go into the markets without that foresight and without doing a piece of analysis. Now, when I say top down, I'm not saying that every single morning you need to start from the 1 year or the 3 month and slowly work down to the 1 minute. That's not the case. Even in the morning, we can just start on the 1 day or the 4 hour and still work lower, just to understand exactly what's going on when we're placing a trade, because it's just a lack of preparation if we fail to do so. Now, anyway, this is all the analysis we really need on this time frame. All we know from this time frame alone is that we want to see price trading down to tap into and mitigate this demand zone before making a move higher to come and run and liquidate that high. So that is the first page of the book we've established. As we then go lower, we understand, well, right, we want price to come and mitigate that demand zone, and we understand that from A here to B down here where price is currently, we're obviously creating a correctional wave, a correctional wave in bullish structure is always going to be coming back down, so therefore bearishness. So let's start to identify the bearishness inside of this. So we can see here, if we use a path tool, just to highlight that quite clearly, path tool there, we've had impulse, correction, impulse, correction. That's not an impulse because it doesn't break the previous low. So this entire move acts as the impulse down to this level here. We then have that correction coming back up. And then again, this is not an impulse because it does not break the previous low, and therefore this entire move is the impulse, okay? So that is the current structure of the correctional wave that has traded as bearish from the extreme high in the market to trade us down towards the demand zone. So from here, we understand that the most recent bearish impulse inside of this is obviously going to be this move inside of here, where again, we go from A down to B. So that is our point of focus as of right now. We can actually simplify that. Obviously, we know that price starts from here, but from this initial move down we've already had price come back up to mitigate all positions inside of there. And what that means is that everything above this level here has been mitigated from this move. So we can actually assume that price should not come higher than this high here, where we have a buy to sell that potentially remains unmitigated. So what we're looking at now is that we want price to work within this move, where we don't want to see this high penetrated, and we eventually want to see price to come down and tap into this demand zone. So this is the second page of the book. We've looked at the bearishness to trade price down into the demand zone, and at that point we know that we have created bearish structure, and we've identified the most recent impulse lower. Within that most recent impulse, we understand that we need to have a correction back up to mitigate something before making the next move lower into the demand zone, where we'll want to see an accumulation. So now what we want to do, we've got page 1, page 2 sorted. We then want to go down a further time frame to generate that next page of info. And what that's going to be is now looking inside of this move here, where we understand that we want this high to be protected. Well, where within this entire region would we like to expect price to reverse from before making any further moves lower? So let's start from the top and say that we have a small little supply zone hiding up here, which, to be fair, on the higher time frame, if you remember on the month, would pretty much be this entire candle. So we can see, following the wicks, if we just move this out of the way quickly, we've had a move up, a move back down, and then from that low, that's where we've had that last buy to sell. So on the higher time frame, we could just keep it as this overall zone. Okay, and then we'll go back down to the weekly. Pull that back along, and then as we're going through, we see that this overall buy to sell price already comes to penetrate. If we draw the line of where the buy starts, we see we already wick into that, therefore it is invalid. Again, we have a buy to sell that starts there. Price does not quite wick into that, therefore we're going to see that as another supply zone. And then as we come lower, we have a buy to sell. There's loads of wicks in there, so I'd assume that's been mitigated. And then of course we have something inside of here which has been mitigated recently, but I want to double check if we go down to a daily just real quick. Was there actually anything valid inside of here? Let's even replay it, that price has reacted to. Now to me this doesn't look amazing, just because the overall buy, we could argue, starts here. We've had price wick into that. Even if we argue the buy starts there, we've had price wick into that. Then from there we've had price wick into it. So realistically, I don't see any really good zone in that region. Let's just get out of the replay function, and we can look inside again. This is where it can be a little bit tricky, because on the lower time frames, as we've delved deeper, there doesn't seem to be any major zone that I would expect price to reverse from. Then you can maybe argue there's a buy to sell in there. Honestly, I don't like it, so I'm not going to draw that as a zone. We've still got this one here, the overall zone higher, which we would refine to this small region, but nonetheless, this entire area still acts as a buy to sell. Same thing there, and then as we come lower, yeah, okay, pretty much. So now that we see that within this is a move lower, we've recently broken higher, so we're expecting a pullback up into one of these zones. Now, why am I expecting this? Well, that is because if we follow the structure inside of here, okay, we know that all the way down here towards the bottom, this should be a protected high, which was broken. Break structure. Kyoto, hello, how are we doing? You okay? So yeah, we've had the break of structure, which is obviously going to indicate to me that we're running bullish for some time. And if we're going to be running bullish, in my eyes, the only reason why we'd really want to do that is obviously to come and mitigate some supply zones. And the supply zones we have identified, of course, are these ones here, with that as a refined zone. Which we can take to the end. Perfect. So yeah, pretty much the bias from here now. Given the break of structure, we're just going to expect price to trade us up until we eventually come and mitigate one of these. We'll want to see the reversal through distribution, which brings us down lower again to tap into this demand zone. So that's basically all we're waiting for. Okay, yeah, we've already had price mitigating this region out. Perfect. Okay, and I'm just doing one final recap to ensure there's nothing we've overlooked. No, I don't think there is. So now that we have looked at that and we understand, and we've added another page to the book of our bias, impulse, we're expecting this correction to come and mitigate one of those to reverse, tap into that demand zone. Now, in order for price to trade up into one of these supply zones, we then need to see bullish structure do that. So now that we look inside of here, we're going to take this as bullish structure that we want to see price continuing within until we eventually come and tap those demand zones. So maybe if we go down to like a 12-hour, we can view this a little bit better. And straight off the bat, we have two pretty clear demand zones that I'm seeing, one of which being this here, point of interest demand, and then of course another one where we have inside of this. Okay, two pretty large zones, but nonetheless some very clear sell to buy that has left some market inefficiency. So we can expect a reversal from either one of these, and we'll also add an alert to that low one if it becomes relevant. As we go lower, just double checking everything looks good there. If anything, that can be refined actually to this down here. Can move the alert. Again, we can probably refine this to that zone right in there. Okay, so we've had to tap into that. We obviously don't need an alert in that, it's already tapped. But this is going to be pretty relevant. Why? Because we've actually seen price tap into this region. Okay, we've seen an initial reaction and pull away, and then we've had another tap in and the break of structure higher. So if we look inside of this on a slightly lower time frame, what this is going to tell me is that the break of this right here is going to signify the end of bearishness and of course the creation of bullishness. So in order for that to happen, we needed a break of structure, which has been delivered. And now we want to expect price to continue trading upwards longer term. Now there's absolutely no reason why price would have needed to come up here to mitigate anything, because there's nothing that needs mitigating this high up. So obviously the purpose of price was not to liquidate these highs and break structure to mitigate a clear zone. No, instead it's done so, in my eyes, with the purpose of changing direction of the market. So if we look inside of here, we can see a very clear zone has been left over at that region. There is no reason really for price to need to trade any lower than that, as this is the lowest unmitigated order that I see within the market. So I'll have that drawn out. And then as we go lower, we look inside of this. Obviously we see the structure is impulse correction, impulse correction, impulse correction, impulse. So technically in terms of this, we've just liquidated a low okay, which we unfortunately don't have enough data to know if this penetration was the purpose of mitigating something down here, or if it's a break for us to come lower to mitigate this. What we can do in order to try and help us is go lower again, look at this structure, and we know from looking at this structure, again, this high should have been protected. We've liquidated that high, and therefore we are delivering a break to the upside. Now, whether that break has the purpose of running higher longer term or reacting to a supply zone, we don't really know. So what we're going to do is we're going to identify those supply zones regardless, just to ensure that we know that they are there and that they're relevant. Okay, we can go down to 3 minutes just to make sure we've identified those correctly. Yeah, I believe we have. But then what that means is that we know we need to go bullish for some time. Okay, is there anywhere inside of here that we might see price come back down to? Definitely not there. It's mitigated. Okay, now pretty much everything inside of here, overall sell to buy, is mitigated. All of this, I would argue, pretty much looks mitigated, other than potentially what I'm seeing inside of here is a little zone inside of this, which is the only reason I could see price points come lower. Okay, yep, so that in there. Looking inside of it, we have that zone there. That gets mitigated. I mean, I don't actually think, looking at this structure, there's any valid reason for price to come lower. I mean, we've obviously come to mitigate something in there. But right now, it's just going to be a case of seeing how price reacts. So we're sort of holding at this region where we're either going to come and tap into this demand zone, reverse and go higher, or we may potentially react to some of these supply zones where we'll leave an alert. The reason I want to identify these is so that if we do see price tap into them and we see signs of a reversal, it's just going to give us a bit more info on the future of this trend, because price is either going to trade up, tap into these supply zones, reverse, come down, then tap the demand before going higher, or price is just going to shoot through these and continue trading higher from here. Now, unfortunately, we couldn't really identify any clear demand zone inside of this region where we'd look to want to get involved in a buy position. So it is now just going to be a waiting game for one of these alerts we've set to pop off. So yeah, I mean, that pretty much covers the analysis for this market. If anyone in the chat has any questions about that, or if you'd like a full recap, make sure to let me know. What's good? Hello, how are we getting on, mate? You okay? So yeah, I guess we can do a full recap. I see a couple people have just joined in, so probably not a bad idea to do a recap quickly of this top-down analysis we've just done and this bias and story we've just established. I also just want to throw, if you're reading this, James is a great man, much appreciated. Thank you very much. How have you been anyway? I hope you had a good trading week last week, a nice chilled weekend. Benjamin, hello, how are we getting on? But yeah, what I'll do is I'll quickly recap now. I was just talking through right at the start before we actually went through the top down why it's important, and I was basically saying the reason why we should be doing a top down analysis, a full top down every week, and then some form of a top down every single day. Now the reason why we want to do that is because imagine that I gave you a book that has even just 100 pages, right? I give you a book with 100 pages. Now I give you two scenarios. The first scenario is I'm going to say you're going to pick just one page of this book, you're going to read it, and then you're going to summarize the entire book to me and tell me what it's all about. Okay. Now on the other side, I give you the book, I say read all 100 pages and now give me a summary. Of course you're going to have so much more detail and such a better understanding of what's going on from that second scenario where you've read all pages than the first. So why, when we enter a trading day, would we ever just load up the market, look at 1 or 2 time frames, try to make a prediction and take trades from that, when we have the opportunity to read all 100 pages, i.e. do a full top-down analysis to gain the fullest of understandings we can before placing a trade. Now, of course you can say, well, what if I just do it once a week? I'll remember. you'd honestly be surprised how much information and how much, I guess, understanding of the market you lose as time progresses and elapses. So the most important thing is doing a top down every day, just to remind yourself of that, and it's just going to put you in a much better headspace. Now, that doesn't mean that you need to start from the 1 year all the way down to the 15-second every single morning. No, it can simply just be a more condensed top down, maybe the 1 day to the 15-minute, the 4 hour to the 1 minute. It doesn't need to be a full top down, but still just giving you what I like to call foresight, and that's a key word here, gaining the foresight on the market. Now, yes, we can do a recap on what we did. So we just started, as I usually do, with a full top down from the 3 month. Pretty much the exact same bias as it has always been in this market, where we can clearly see bullish structure, okay, where we've had a clear impulse, correction, impulse, correction, impulse. And just looking inside of this, we can clearly see that after this impulse, we had the correction back into this demand zone, a new impulse to liquidate the high and move lower, and we're now approaching this demand zone, which I'm hoping to see the mitigation of. I've also got this identified down here because I understand this still remains as an unmitigated position. James, need to shoot. Thanks, mate. Take care. Dean, no problem. Appreciate you joining us. Enjoy the rest of your day, mate. Yeah. So this is what I like to sort of call page 1 or chapter 1 of the book. We have bullish structure in front of us, longer term. We want to see price mitigate this demand zone. We want to see the reversal, and then price move higher to liquidate the high. Now, as we enter chapter 2, we understand that in order for chapter 1 to happen, and in order for price to reach and mitigate this zone, we obviously have to trade down to it. Now, if we need to trade down, that means we need bullish structure. Now, we know that this entire correction is representing bearish structure. I think I said that wrong last time. Bearish structure to move down. So this entire move is representing bearish structure. We followed the structural points of this: impulse, correction, impulse, correction, impulse, correction. This is an overall impulse, okay? And now we know that we want that to continue until we mitigate this zone before reversing, okay? That's the next chapter. Let's go lower. And now, rather than looking at that overall bearishness, we're now just focusing on the most recent impulse within that trend, okay? Now, looking inside of that, we can see that, right, well, this is the overall impulse here. We've already moved back up to mitigate everything in this position. So what we want is, we don't want price to exceed this high on account for the fact that this here is the highest possible unmitigated position that we're watching. So now what we're going to do is we're going to actually look inside of this as an overall trend rather than a single impulse. So if we look at this as an overall bearish trend, we understand that we have left over some unmitigated orders, so that if we or when we deliver a correctional wave, we can expect to see that correctional wave come up into some of these zones before mitigating them and reversing lower to create that next impulse lower. And then when we go lower again, so even the next chapter, we can see that we've recently delivered a break of structure. So we know that in terms of this bearishness or this trend, we've got impulse, correction, so on and so forth. We've actually broken structure, so we know that correctional wave's coming back up. Now, because we know that correctional wave's forming, we know that that bullish correctional wave needs to continue trading or continue forming until we reach one of these supply zones. So what we then do is zoom in and focus on this bullishness, because we know that it should continue, and we know that we can get involved in the market in buys all the way up until price mitigates one of those two zones. So now that we see this as bullishness, we've now identified two demand zones that price would need to mitigate before continuing higher. We have an alert at the lower one, but then we see the higher zone of the two has actually recently been tapped into and mitigated anyway. Okay, so if we then go lower inside of this, so yeah, very clear sell to buy. Price has tapped into that. Price recently tapped into it, where we've then seen a reversal, but most importantly, we've then seen a break of structure to the upside and therefore I like to expect that that's going to indicate the reversal and the creation of a new bullish trend, which should come to penetrate and exceed this high all the way up here. Okay, but now what we can see is that, right, well, we need to eventually wait until price trades lower to tap into this zone. Now, in order for this to happen, we then looked at price as of right now, where we've potentially had a liquidation of the low. Okay, so does that potentially mean we're now going to go bearish until we trade down into this demand zone? If that is the case, we know we'd like to go bearish from one of these two supply zones that have been identified. So we'd move up into them, mitigate them, reverse, tap into this. We'd accumulate, reverse, then move higher to continue that higher time frame bias. Going further into this, you can obviously now gain an insight into why these two are the zones I've identified. We can see very clear buys to sell. And then the reason why we can expect this to happen is because we've recently broke out of this range to the upside, liquidated some highs, and showing signs of running bullish into something, whether that's bullish into one of these zones that we reverse, or it's bullish to exceed the high and continue longer term. So that is the overall bias and story we've established. We have alerts set where we need them set at. And we also understand exactly how we are going to tackle the market, regardless of what happens. Now, I've also not been too fixated on one extremely specific thing that I want to see the market do. Instead, I have given or laid out a few possible scenarios or a few possible forecasts of what price may do. And I've prepared myself and basically told myself how I would trade the market regardless of which forecast plays out. Now, a mistake I see many people make is that they're quite naive to the fact that the market can do anything at any time, because it is all just probability and statistics. There is no definites. There's only potentials. So what that means is that we cannot have one solid thing. Like, I cannot just say, right, the only thing price will do from here is just move higher to penetrate this high. And then I can say, well, how do we get involved in that? Okay, well, we just try and place a buy position somewhere around here. That's called having a fixated bias, because there's only one thing we're expecting price to do. Instead, I understand that as of right now, there's a couple of things price could do. Price could move higher from this point to tap into one of these zones. Either one, it could reverse and react from to make a move lower. If it makes a move lower, that move lower could come to mitigate this demand zone or just fall through. However, on the flip side, price could continue higher, a little tongue twister there, to just come and mitigate these zones, go through them, break this high and continue trading higher longer term. Or price could just trade lower from here, not mitigate any of those, to then come and tap this. So that's like 3, 4, 5 different possible scenarios of what price could do moving forward. However, I know exactly how I'm going to trade them if that happens. So if price taps and we see reversal signs in one of these zones, we know we're going to want to get involved in sells from the formation of distributions. If price blows through these and the second price blows through them, we're then going to be identifying demand zones in that region to start going bullish from. If price just continues trading lower from now, I'm going to wait for it to tap this zone. I'm going to find signs of an accumulation and breaks higher and get involved in a buy. So that's three different possible scenarios we've just walked through, and 3 different ways I'm prepared to trade that market. So I think that's what's really important, is being adequately prepared for what the market could do. So does anyone have any questions about any of that I ran through? I have sort of thrown a fair bit of information your way there. The 2 main things I want us to take away from that is foresight, and the other thing being preparation. So I'll just give everyone a minute, just in case anyone has any questions. Obviously, make sure to get them sent through. Okay, seems like everybody is pretty comfortable with those, right? So what we can do here is move on to a different market, I guess. I know Somebody stated, do you have any sort of decision tree? I think I understand what you mean by that. Do you mean the tree where it's sort of like, let me just get a written, or is it in your mind only? I kind of have some list of rules I use, but I don't have one written out. A lot of it is in my mind. So let's say we start here, and this is structure. And from structure, or let's say this is price as of right now, there's two things we can do, right? We can either go up or down. Okay. So from now we can either go up or down. If we go up, we then have two scenarios. Okay. We either have the mitigation of a zone. Okay, so we tap in, reverse lower, or if price goes up, we just continue longer term. Now, if we see this, we see price mitigating the zone. Again, there's multiple things we can do, right? Because price is either going to form a distribution inside of that, where we'll see a clear distribution and we'll get involved from it. Or B, when we see the mitigation, we may first see the mitigation and then see price actually move higher to the higher zone. So I guess that's what you mean by like a decision tree, where we understand there's so many different things that could happen. So yeah, I'm just understanding that in my mind. I don't have it written out or anything. I just understand all of that in my head. And then I'll understand, following the strict rules, how I need to tackle the market for each scenario. So the bottom line is that no matter what happens, I'm always only going to get involved from the market from the tap of either a supply or demand zone. Okay. Now, in order for me to get involved from the tap of a demand zone, I need to see an accumulation. In order for me to get involved in the tap of a supply zone, I need to see a distribution. But what identifies a valid accumulation, for example, or even a distribution? Well, there's a couple things we need to see that, to me, represent valid points of interest, or valid reversal, sorry. There's three things I need to see, and we can walk through those in just a second. Okay, structure, and then I want to grab that brush tool back out. Okay, so we have 1, 2, and 3. There's three things I need to see. Okay, so number one, I need to see liquidity being built. That's the first thing we need to see. Well, why is that? Because when liquidity is being built, it means that what the institutions are doing, or what the composite man is doing at this point, is that they are absorbing or manipulating the supply and demand balances of current. In an accumulation, when price is trading down, we know that at this point they're absorbing supply. Well, why? Because we've just had a trend where supply has been really dominant and price has been really quick to move lower, but then we suddenly just hit a level where it can't seem to penetrate, and where we're having multiple reactions from. What that means is that at that level, supply is being absorbed so that it cannot move any lower. What that means is that the institutions are active in the market at that point. So liquidity is being built. It also represents the start of the institutions trying to manipulate retail traders into losses. Then we move on to number two, and that is liquidity cleared by high volume. Okay, I've managed to do that by high volume. Perfect. And what we mean by that is that we want to see price push through that level of liquidity, as we've done here. Why? Well, that's going to make sure that everyone that got involved in buys, seeing this as a level of support, has now actually been manipulated into a loss. It also brings price lower so that the institutions can gain the lowest possible price for their buy positions. So it aids them by manipulating people out the market. It also aids them by giving them a more profitable position. So that's obviously why that happens. And it also is, again, an indication that the institutions are active in the market at that given time. And then number 3, break of structure delivered. This is crucial for us to see before we ever look to get involved in a market from a zone. Why? Well, because there's no confirmation that price has reversed the trend until a break of structure has been delivered. 1 and 2 are only early signs. It represents the fact that institutions are in control. But then finally, the break of structure is that final confirmation that we have reversed the trend. And once we've been delivered with all of these 3 things, that is enough confirmation for me to then place a trade. So I have to be able to tick every single one of these boxes so that I can place a trade. Now, if one of these is not ticked, I simply do not allow myself to place a trade, no matter what. Now, we can actually compound on this. And you're probably going to ask how. Well, we can compound on this because what we may see happen is that after we've been delivered this overall accumulation, and we know that a reversal is happening, we may then decide that we want to do what? We may decide that we want to gain a more refined entry. Okay, so what we could do from there, where are we at? What am I looking for? Why can't I find it? A rectangle, yeah. So we have an overall sell to buy in this region. So we have identified another demand zone, and we know that prices come to tap back into that. Now, what's likely happened inside of this region here is that we've seen this overall thing again. Okay, so we've seen another accumulation, however that may look, where we can get involved in a position. But this time, if we get involved from here, because it's happening on a lower time frame, we're able to get a more refined entry and a smaller stop loss. So this is my 3 ticks of confirmation I need, but it's something that can be compounded multiple times in order to gain a refined entry. So that is pretty much the main, I guess, checklist or list of rules I have in place, because no matter what the outcome is in the market, the only time I'm ever getting involved is from the tap of a zone. And when price taps a zone, I need to see those 3 things in order to enter. Yes, exactly, that tree. I'm full of different concepts, and that chaos is very hard to organize. Yeah. It's time to look at USD. All 3 boxes seem to be ticked now. Yeah, so an alert just went off. We've had a spike of volatility in the market, as we can see by the fact that within just a few minutes, we've had price move up quite vastly. So we know we've already come to invalidate that box. So let's see whether price either reacts to this or if we just continue higher. So it's going to be a waiting game as of current until we decide exactly what's going on there. But I'm quite curious to know for other people in here, did you have any set list of rules, a checklist? What's your process when it comes to enter a trade? Like, do you just do it based on instinct, or do you have a set list of rules like me? Okay, I guess not, no problem at all. So yeah, obviously in this example, going back to that tree that we were just talking about, like at all times, you're going to have this tree with like 8 different branches coming off of 8 different things that could happen. Now, what I see a lot of people failing with is that this is like price now. Okay, this is price right now. And then obviously, right, from right now, there's only 2 things price can do, right? At any point in the market, where price can either go up or down, okay? Up, down, okay? But then stemming off from each of these, We understand that when price goes down, it could go down to different regions. It could just follow lower time frame structures. It comes down to deliver a correction wave. It could then be following higher time frame structure. And we have maybe 1, 2, 3, 4, like 5 different things that could happen. Okay, 5 different scenarios. And then again, within each of these scenarios, there's a further maybe 2 or 3 things that could happen. Okay, so we understand that the possibilities are almost infinite, right? And then we have this similar thing. We have maybe 4 or 5 different things here. Okay, so from right now, where price is right now, there is so many different possibilities of what could happen. Okay, if we look at all of these branches, you know, just from the tree of where price is now, if we look at all of these branches here, we understand each one of these is a possible scenario. Now, where I see a lot of people go wrong is that they'll just focus on a single branch. So I see a lot of people who will quite simply just see price and they'll say, I believe it's going to go down. So what I'm going to do is I'm just going to place a sell position right now. Okay. All you've done there is you've just focused on one branch out of the 30 different possibilities. And because you're only focusing on one branch, if price does not follow that branch and instead we come this way, we have not prepared for this outcome because we've been too naive to only think that this is the only possible outcome, and therefore we're not prepared to tackle the market no matter what happens. I can tell you instinct is not good because you can't remember every step every time. Yeah, instinct is the worst way, in my opinion, to look at trading a market. Like, if you leave it to instinct, you're leaving it to emotion, and the worst thing we can do is leave anything to emotion. Okay, we need to be as emotionless and robotic as a trader as we possibly can, and we want to remove any opportunity for our emotions to be involved. Now, the more, I guess, logical and statistical, so the more we use numbers and set processes, the more we remove the emotion, and we become more like a computer that has been programmed for one single function. It will always do that function. It doesn't get halfway through the function like, no, I'm not feeling it today, and stop. No, it has the function programmed. If or it will do this, X, Y, Z. If we see this, we'll do this. If you see that, do this. That's how we want to be as a trader. So I'm looking to organize things as much as possible. The decision tree can help you a lot. Yeah, definitely. But when it comes to like the decision tree, this is just a mental thing I have where I'm thinking, right, yeah, I understand if price goes up, it can do these things. If it goes down, it can do these things. And I'm just keeping a mental track of all of that. This is also why earlier I said it's really important for us to constantly be doing top-down analysis, so that we're aware of all of these different outcomes that can happen. Because again, if we just stick to one time frame or one bias, we are being naive to the fact and only focusing on one singular branch. Even though there's 30 plus different scenarios, we've only focused on and adequately prepared for one. Whereas when we do a top-down analysis and prepare to the best of our abilities, we are making ourselves aware that all of this is on the table, and also making ourselves aware of how we could trade any of these scenarios to the best of our abilities. So that is just an extra touch on what foresight is, really. Let's get rid of all of that. We see we've just been given an alert has been set off, which means price has just tapped into this zone. So we can see what happens from there. And just a reminder to everybody in here, we always upload these live sessions into the Learning Lounge, so you can watch them back and recap on them. Anybody who's in here that isn't in the Learning Lounge, I mean, firstly, what are you doing, right? It's a brilliant place for learning material. We just give out our analysis, we give out fundamental reports, we give out fundamental news, different things that will help us be adequately prepared for the market, whilst also allowing you to gain an insight into what we're doing. For example, the most recent post in there is a trade that was taken on XAUUSD, which ran or is running currently 770 pips, and the opportunity and the analysis was actually given out for people to get involved in that. So yeah, make sure to get involved in that. Link is always in the description to anybody who is curious. Okay, let's go back to the chat. Does anybody have any questions or anything they'd like us to touch on? We can sort of just keep an eye on what's going on here. And now remembering that checklist that we had. Remember, 1, 2, 3. Okay, well, firstly, we need to see a level of liquidity built up, which we can argue already. We've got some fairly equal highs here. So that could act as liquidity. So we're looking potentially at number 1 being formed, which is great. But yeah, this is pretty much just a lot of the knowledge for me that sort of revolutionized the way that I looked at the markets. Because all that learning anything is, and especially trading, is it really is steps. Like, it's not something you can learn all at once or learn quickly. There's so many little branches and stems of information that you require, because what will happen is I can sit here and tell you all of these things. Like, you can have somebody sit there and tell you all this information. You can read it, you can watch it. But what's going to happen is there's going to be one point where all that information clicks. Like, you could spend 2 months reading up on a topic and you never fully grasp it. And then one day somebody says an analogy or you figure it out yourself, which just makes that 2 months of information suddenly make sense. So that's why I really like to use analogies or try to explain things in depth to try and help people sort of reach that light bulb moment where they're like, wow, okay, that suddenly makes sense because of this analogy. It's sort of like, imagine you have a tree, okay, that you want to cut from the roots to take, to sort of cut down, right? You're not just going to cut it and leave the stump. You actually want to get all the roots out so you can pull it out completely, okay? Now, like what we were saying before, naive people will simply cut through one root and try to pull the tree out and wonder why it's not moving. And then because it's not moving, they will blame other factors. They will say, right, well, you know, I was prepared, but it's not moving. It's not me. It's just not meant to be, okay? Other people will spend time researching where and why all the different routes are there and spend time preparing to cut all those different routes so that eventually, once they're all cut, they can actually pull that tree out of the ground. And afterwards, when it's happened, they feel satisfied, even though it took them a lot longer to do it. They've finally reached the end goal because when their initial expectation didn't play out, they were actually prepared for the other scenarios. I was in that point once. Everything started to work out, but I lost it. What do you mean by that? So you were at what point? So you mean a point where everything was going well? So when you say you lost it, what changed that stopped you from having everything working? Because typically, sort of like, once you fully understand something, it's hard to go backwards. Obviously, there's going to be slight hiccups here and there where something gets the better of you. But what do you think was sort of the reason why you lost it? I think for a lot of people, it's usually because they believe understanding how to trade is something where you have these obstacles like a market, and you're climbing these steps, and eventually you get it all, and boom, it's an easy ride. Whereas actually, it's this never-ending thing where we have this infinitely, and there's never a straight platform. And a lot of people will sort of climb up, reach this point here, and think, great, I'm at that platform, I don't need to know any more, I'm adequately prepared. And then when they try to do this, they then hit this wall where they realize, okay, there's more to it. And then they move up, and then they try to do the same thing again. No, I fully understand it now, I don't need to learn anymore. Again, what happens? They hit the wall. The best traders I know are the ones who understand that the path of a trader is linear, in the fact that it's always a constant pursuit of more, and always having to strive for more information, and never trying to get complacent and just ride that straight line. Rowan, really helpful advice, thank you, much appreciated. I'm hoping this all helps. I'm trying to just throw out a lot of analogies and information on things that I feel people may struggle with. Maybe it wasn't it, but I started to make significant profits on an account which was for many years below the starting point, and my broker asked me to do KYC, which I couldn't complete and had to withdraw. Okay. What is KYC? I've never heard that phrase. KYC. Just couldn't complete, had to withdraw. Well, surely at that point then, if you started an account and for a while you were making significant profits, now you've had to withdraw, surely the next step is to just put those funds into a different broker and continue trading. Because if you've been profiting significantly for some time now, continually, that obviously means you're a profitable trader. So I wouldn't say that's a step back at all. Then everything stopped working, or maybe it was just the coincidence. No, your customer. Oh. Okay, fair. So surely can you not just take those funds and put them into a different broker and start trading with a different broker? Because if you've proven to yourself you can trade, and you said you're making profits, which means if you're making profit, you've got funds to trade with. Surely the next step is to find a different broker. And I mean, if so, little plug-in, LAGFX is actually partnered with Axie. I'm not sure where you reside or where you're based, but Axie's like one of the top 5, top 10 brokers in the UK. Like, they are established and recognised as one of the top brokers. Situated in London. If you know football, they sponsor Manchester City. So they are well established. And what that means is that if you actually use Axie as your broker, you actually get the lifetime VIP pass for 80% cheaper. So I wouldn't just plug them if I didn't believe in them as a broker, but we're lucky enough to be established enough at this point now where we can work with brokers who are known well and are trusted. So now back to demo trading and also losing money. I know Axie, it's also available in Poland. Cool. Okay, so a quick bit of analysis there. So what's probably happened is that you were in a nice routine of trading and profiting on this account. You've then had to withdraw, which has then shifted your mindset. Because obviously the processes were working, and if you're using the same processes and they're not working, it's not your system that is wrong. It's something to do with the psychology and the mindset. So I'd imagine what's happened there is that whole process has shifted your mindset in some way, and it's causing you to implicate those systems slightly differently. But yeah, I definitely recommend sticking to a demo account then until you regain that consistency. And yeah, by all means, look to then get back into working with a broker to make those profits. Do you know or can you think of what you would be doing differently now that's making you not profit? in comparison to beforehand when you said you were making good profits? Is there a clear thing that you can see as different? Okay, my system wasn't written, and I think I lost the flow and I had to withdraw. Yeah, so as I thought, it sort of knocked you off the path that you were following. So yeah, the best step is to recap and take a while just to think. Sit down and think, what was the system when I was profitable? Write it down. Simplify it into 3, 4, 5, however many steps you want, like I've done, where I had the 1, 2, 3 steps. What I've done is, over time of using demo accounts and analyzing the markets, I've written down a full process on what usually happens in the market when I'm right, and then simplified them into 3 steps, which help me to be on the right side of the statistics. So I would recommend that, like, just write out a bit of info on what was working, and then try to simplify that into a set list of rules or boxes that need ticking, and then just practice that for a while. And with this market, there's not much going on right now. Obviously, we had a little bit of liquidity built here. We've had a move lower, but even though we've broken structure to the downside, I don't see that as a clear reversal, because we've not had 1, 2, and 3 delivered. We've only had 3, which is a break of structure, and potentially even 1. We've had liquidity built, a break of structure, but we weren't delivered step 2, and we need to see all 3 steps to place. But yeah, regardless, I mean, does anybody have any final questions? We finished the top down there. I feel like I've given some good info out. We're sort of on the hour mark here, which is usually how long I like to keep these going. Just because we also re-upload these into the Learning Lounge, so I like to keep them around an hour for people to watch back on and get that info from. So if anybody has any sort of final things they want to discuss or questions they want to ask, make sure to throw that through. We can get to it. Any final questions? No last question from me. Thanks for your advice. Yeah, no problem at all. I appreciate you tuning in and obviously engaging and speaking with me. Makes this stream really noble. I know. I enjoy it. Sort of relaxes me. I tell you what. Do you have Telegram at all? Because we should. Do you confirm your confluences on 15-second only? No. I guess the best way to look at it is that I don't have a set time frame that I use for confirmation. Sorry, one second. I'm just typing in my. That is my Telegram username. I'm going to send through at James LAGFX. So I'll send that through. Just search it in on Telegram and shoot me a message so I can save your contact. Sorry, yeah, but going back, do I usually confirm on 15-second? No. What actually happens is that it depends what time frame I've done the analysis on. So on this time frame here, I have done this analysis on maybe the 10 or 15 minute, okay, where we see that what's happened here is I've identified the structure inside of here and I understand what needs to happen, and I've done that on a 10 or 15 minute time frame. Now when price taps into a zone, I usually want to go, I would say like 30 to 60 times lower than the time frame I viewed it on in order to find confirmation. So with a 10 minute, how many 15 seconds go into 10 minutes? Well, that's going to be 40. So we've gone 40 times lower to find entry confirmation. Now, if on the flip side, I was on the 4 hour and I see that price tapped me into this here, if we replay that, I would not go to the 15-second again for this. I would go 30 to 60 times lower. So what is 30 to 60 times lower? Well, I think a 15-minute. How many 15 minutes go into that? No, that's only 16. So maybe like a 5-minute, because that's going to be about 48 times lower. And then we'd use the 5-minute for entry confirmation here. Obviously, I wouldn't use the 15-second, because if we do that, there's just way too much going on here. But what I'd do is I'd go 30 to 60 times lower, which in this case, I think a 5-minute would be valid. So hopefully that answers that. I don't have set time frames for anything. Like, I don't say I always use this time frame for this. I just have systems. So for example, if I've analyzed structure on the 4 hour and we tap a zone on the 4 hour, I'll look to go 30 to 60 times lower on the time frame in order to find entry confirmation through an accumulation or distribution. Hopefully that makes sense. Okay, yeah, I think that pretty much answers everything. Hopefully you got my Telegram app there. If so, send me over a message, because I would be interested in keeping up with your journey. Thank you, it does. Yeah, perfect. Okay. Yeah, I mean, just one quick reminder for everyone in here. I'd appreciate it massively if you're all subscribed. Honestly, it does help a lot. There's also a lot of educational videos on the channel to anyone who's relatively new. If you actually go into the playlist, you'll see we have a Learn to Trade playlist and a Learn to Trade Smart Money Concepts playlist with so much information. The Learn to Trade Smart Money Concepts is, I think, a 7-part series of everything you need to know about my strategy. The regular Learn to Trade is just tons of different educational videos on different topics. I'd highly suggest that you watch through those, like identify what you need to work on in your strategy. Everybody has strengths and weaknesses. Everybody's going to be different. Identify your weaknesses and try to build upon them. Now, maybe your weakness is, I don't know, doing top-down analysis. In which case, looking to Learn to Trade, we have something on top-down analysis. You can work on that, improve it. But yeah, anyone in here, I put in my Telegram user at James LAGFX. Ever any of you need to contact me or have further questions or would like to keep in touch, obviously make sure to send me a message on there. Just mention your name, we'll save you the contact and we can stay in touch. But I think that's pretty much going to conclude this live session. Thank you to everybody who tuned in and engaged with us today. Obviously, we're going to aim to keep these somewhat regularly so that we can have this better engagement. We can walk through things with people live. But if not, just make sure to message us. Me, Luke, get yourself into the Learning Lounge for regular updates and analysis. And just stay in touch. You know, we have a decent community that's been built now. And it would honestly be a pleasure to have you all as a part of that. So yeah, thank you everyone for watching. It has been a pleasure. And we will see you either in the next stream or over on Telegram. So yeah, thank you everybody.